Hello, ladies and gentlemen. Good day and welcome to the show. Glad to have you guys here on the Tuesday, the 2nd of February, 2020. You know what? Physical silver, I think they're very low on supply of actual physical that can be sold into the market. It's ready for sale. Now, there's a lot of silver out there being held in private hands, but they ain't letting go of it right now. I'll tell you, and they're not going to let go of it until prices go substantially higher. Now, paper silver's lots to be had. They're pumping it out there like crazy. And there's a detachment between the price of the real physical supply and the paper silver supply, you know. And the paper silver all the way through, this is a key to their manipulation of the price of silver, is the paper silver. They use it to lower the price of the real physical asset, which is completely unfair. But it's been going on for a long time. It's like the tail wagging the dog. Anyway, let's get in there and let's take a look. Let's open up the charts right here and take a look at what's going on. We're going to take a look at the silver price today. Here they go, boys. Knocking her down. And down $2.27 for the paper. The paper silver. They can knock this down to zero if they want. I don't really care because premiums are not dropping very much and the silver suppliers are very, very tight. I don't know. Some of them are out. Now, last night, I went to my store that sells silver here in Atlantic Canada. They sell for the whole region. I went to them online just to see what's happening. I was curious. And I've went to them a lot of times. I've went there to see what the price of silver is and what it's doing. And they always have supply. Well, not today, but yesterday, they still had supply. They had these not so common. They were out of the maples and they were out of the eagles, but they had these other coins like, Australian Philharmonics. They had a few of them, and they had a few of this and that and everything. Now, strip clean. I went there today. Everything's sold out. Somebody come in and bought everything they had, cleaned them out. Uh, and so they don't have anything. And they supply this whole region, all of Atlantic Canada. That's New Brunswick and Nova Scotia. Millions of people live in this region, and this is the only store that supplies for the whole region. They're out there. Well, I shouldn't say the only. I think there's another little store, but they're the big one. They're like the Atmex for Atlantic Canada. They're out of everything. Bought out, sold out everything in silver, and half of their gold's gone. I mean, it's just like ridiculous. And now the prices and the spot price is dropping. Well, the price should be dropping at places like Atmex and stuff. Should be dropping like a stone because the spot price is dropping like a stone. It's not. It's not. I don't think it is. Because they're out of supply and the premium is just growing wider. Now, let them keep driving this down lower and lower. And it's going to make it more and more absurd. And after a while, it'll make the spot price drop. People will start saying, hey, this is not silver. This is just a bunch of paper. And they'll start selling it off. And the spot price could go lower and lower and lower. It could go down to $5. What'll the Fed do? When they see a problem develop in any market, any particular market, doesn't matter, a silver or it's the repo market. You saw how they stepped into the repo market. Bing, bang, boom, they stepped right in. And you saw how they stepped into the corporate bond market and how they can step into a market. They don't even have to say anything. It's just all of a sudden you see the market start to move. Fed controls all the markets. If they see too much of a discrepancy here in the silver market or too big of a problem, they could step in. I'm not saying they will. I'm just saying they could. So how do I think that they would step in? I think they would buy up the paper short contracts. They would buy the SLV, GLD. And with their kind of buying power in this small of a market, they could bring the spot price back up to match the physical price. Awfully quick they could do that. If it gets too far out of line. And I mean, has anybody considered that happening? because it went through my mind this morning that that could happen. Now, I'm not saying that's what they're going to do. I don't want everybody going out there and saying, oh, Glenn said the Fed's going to. No, I didn't. I just said that it's within the realm of possibility that they could do something like that, you know. Let's take a look now at cryptocurrency. Cryptocurrency today is $1,040,000,000,000 industry. And we're looking at a Bitcoin price of 34,741. We're looking at Ethereum at 1432. XRP at 36 cents. XRP's dropped back a little bit, 36.9 cents. Polkadot 1656. Cardano 43 cents. Litecoin is at $142.65. Okay, that's what we got for our top coins. The Dow Jones today is up 596 points at 30,808. So we got a big day on the Dow today. Dow's rocketing up today in the financial. They're controlling all the markets now with the money printer. With the okay, not money. It's not money. It's currency. With the currency printer. With their brr, they're spinning off that. They're controlling all the markets now. And you know where we're headed. We're actually headed toward a hyperinflation. But to get to a hyperinflation, first we got to have a period that's called the acceleration phase. And as long as we're in this depression we got going on right now, the Fed's laughing. They're laughing. They have total control over the depression with the money printer. If the depression starts to get out of hand, they'll just print more and bring it up out of the hole. And as long as they get the depression here, you're not going to have a hyperinflation. You're not going to have a problem for the Fed. They can continue to play in the markets and do whatever they want as long as there's a depression going on. So they're going to try to play this depression card, you know, as long as they can extend it out, because it works to their advantage to keep inflation cooled down, to keep runaway inflation from coming in. But, you know, as soon as we start to get a really substantial recovery, it gets much trickier, you know, and then we'll go into the acceleration phase, because the banking system then, which is the biggest money creator of all, far exceeds what the Fed can do. If times start to pick up and things start to look a little bit better and stuff, well, they'll start lending money out again. And this is the biggest money creation tool of all. And what they've done with these banks now is they've lowered the reserve requirements. This means they're not even fractional reserve anymore. They don't have to hold a fraction back. They can lend out 100%, not have any money. They can lend money and not have any money in their vaults. No cash, no nothing. Just lend as much as they want too. Millions, billions, trillions. They can create money. The banks can create money. People don't realize this. They think the central bank's the only bank that can create money. No, every little bank can create money. And how they do it is they just make a book entry. You go in and say, Mr. Jones wants to borrow $100,000. And they just go into their book and just write down $100,000, and they've just created $100,000 into the system. It's just that easy. But it's not really that easy, because once they create that book entry, then if that particular bank doesn't get that money back with interest, then it's called a non-performing loan. And the problem is, a bank gets too many non-performing loans, suddenly the bank is insolvent themselves. So once they've created that book entry and they've created that money, right, then the bank is on the hook for that money. They have to get that money back with interest. And this is why they're a little bit careful about lending the money out, to make sure that their clients are credit worthy. Right? But when excitement gets into the economy, and then they lower these lending standards down a little bit. They're not quite so stringent when the economy's starting to pick up and look good. And that makes the economy move even faster. See, we've had a little bit of a depression lately, you know, and it's created almost like a short-term debt cycle is what it's done. We have the long-term debt cycle and we have the short-term debt cycle. And what this has done is created like a depression that we've been going through for the last number of months with COVID. It's created a push down in the economy, and the economy's ready for a bounce back. And in other words, it's created almost a similar pattern to a short-term debt cycle, right? Within a longer term debt cycle, which is the fourth turning, like I think they call it, or whatever. That's the longer term. We're in that right now, but within that cycle, we can have another secondary cycle where we could have a bounce back coming into summer and fall of this year. And that's when the banks might lower lending standards a little bit, and then all of a sudden money will be coming everywhere. That's the acceleration phase. But it won't last. It's like a cycle again. It's like a very short-term debt cycle. It won't last. Then everything's gonna crash into this hyperinflation. Hyperinflationary depression is the worst kind of depression. Means there'd probably be food in the grocery stores, but nobody will be able to afford it. It's sick. Everything's sick. So now we're taking a look right now at the Dow Jones. We're going to take a look now at the crude oil. Crude oil's on its way up. It's up $1.51 today alone. Well, diesel fuel goes up too. And this is one of the biggest costs for miners out there who have to try to mine silver. This year, when the numbers come in, for the silver production, I'm waiting to see them. I haven't seen them yet. What the numbers are for silver production worldwide in these next 2 years for 2020 and 2021. The silver production, but I can tell you right now, they're dealing with an ore grades that are getting lower and lower every year. In other words, when they dig an ore, they go to what's called a ton, 1 metric ton of whatever material it is, ore, generally it's type of ore. There's less and less ounces of silver per that ton, It's been dropping, and it's going to continue to drop, and it's going to start dropping rather rapidly. Really going to start to affect the price of silver at a certain point. When it gets less and less and the price of diesel fuel gets more and more. It's just a no-brainer that this is an asset class that is slowly going to go up over a period of, say, if you're a long-term holder, like if you got silver right now and you hold it out for like 5 or 10 years, it's really going to go up a lot. An awful lot more than your bank account ever would. They're not paying you any interest money in the bank. How much interest are they paying you? Like nothing. It's almost zero what they're paying you for a bank account, unless you want to risk it and put it in some sort of a different type of a fund that the bank will offer you, if you want to put it in what they will call, what the bank will call high yield. It sounds good, Martha. It sounds great. High yield. We're going to get high yield. We're going to make a little bit of interest at least. Yeah, it's junk bonds. They don't use the word junk bonds. They don't say, okay, we're going to invest you in junk bonds. They say high yield instead to trick you. Instead of saying junk. Okay. Merrill Lynch move index today, 46.28. They're keeping the move index down. Bonds and rates today. What we're looking at is rising on the long end of the yield curve. We're looking at rising yields here. U.S. 30 years 1.87, and we're looking at the U.S. 10 year at 1.10, and we're looking at a rise of about almost 3 basis points today. The dollar's been rising this morning too. Our dollar index is 91.16 and is slowly rising up there a little bit. Thank you guys for listening to my show. If you got physical silver, hang on. Hang on. Because I'm going to tell you, something big's happening in the silver right now. We're looking between the bid and the ask has moved from 10 cents to $1 now. A whole dollar between the bid and the ask. And all of the silver retailers out there are short supply right now. The physical. We also have the spot price going down while there's a shortage. I mean, this is absolutely the market. Silver market's gone bonkers, you know. And I think that there might be something really big coming here for silver. We might be looking at double-digit silver ultimately, and maybe not before even the year is out. This year might not even end. We might get to double-digit silver, something we haven't ever seen before. Because something's a brew, something's afoot in the silver market. You got physical, I'd say hang on to that baby tight because something big might be coming down the pike, you know. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye bye.